Welcome back to Market Shock Brief. Today we are uncovering a massive move in the global financial system that is happening almost entirely out of the public eye. Why central banks are quietly buying record amounts of gold. In the last few years, we've seen a surge in gold demand that hasn't been witnessed in decades. Central banks now account for over 20% of global gold demand, a doubling of their historical average. As we move through 2026, gold has shattered all previous price records, exceeding $5,500 per ounce. But why are the world's most powerful financial institutions paying these premiums? The primary driver behind this accumulation is a phenomenon known as de-dollarization. For the first time since the end of World War II, the dollar's dominance as the world's reserve currency is being actively challenged. The freezing of Russian foreign reserves in 2022 was a wake-up call for central banks. It proved that dollar-denominated assets are not just financial tools, they are political ones that can be turned off at any moment. To mitigate this political risk, central banks are diversifying their reserves. Gold offers something no currency can. It has no counterparty risk and belongs to no government. The numbers tell the story. The dollar's share of global reserves has slipped from 71% to just 56%. This isn't just a dip, it's a structural retreat from the greenback. BRICS nations are leading the charge, exploring gold-backed alternatives for trade settlements. From oil transactions in local currencies to yuan settlement hubs, the era of dollar-only trade is ending. Beyond geopolitics, there is the persistent threat of inflation. Central banks are shoring up their gold reserves to preserve the real value of their nation's wealth against a weakening paper currency. With the Federal Reserve's balance sheet at historic levels and ongoing quantitative easing, the fear of currency debasement is very real. Gold serves as the ultimate insurance policy against this trend. Gold has historically performed best during times of crisis and uncertainty. By increasing their holdings now, central banks are preparing for the next potential market shock. Economists call this the fear premium. The higher the global instability, the more attractive gold becomes to institutional buyers who cannot afford to lose the value of their reserves. Let's look at the major players. China and India have been among the most aggressive buyers, consistently adding hundreds of tons to their vaults to reduce their reliance on U.S. Treasury bonds. But it's not just the giants. Emerging markets like Poland, Turkey, and Uzbekistan are also making strategic gold plays, seeing it as a way to bolster their economic independence. As real interest rates fluctuated, the opportunity cost of holding gold decreased. This made the non-yielding metal a much more attractive choice for cautious reserve managers. This isn't a temporary trend. We are witnessing a structural shift in how central banks view their role. They are no longer just maintaining stability. They are insulating their nations from a fragmenting global financial order. Modern gold vaults are busier than ever. The logistical challenge of moving and storing these massive amounts of physical gold reflects the seriousness of the current strategy. While retail investors often focus on small bars or coins, the central bank moves are on a scale that dictates the long-term floor for the gold price worldwide. What does this mean for you as an investor? When the institutions that control the money supply are buying the ultimate hard asset, it's a sign that they are bracing for a period of extreme volatility. In an era of high debt and political division, gold provides a level of certainty that paper assets simply cannot match. It is the ultimate hedge against financial chaos. Analysts are now projecting even higher price targets for 2026 and beyond. Some see gold hitting $5,000 an ounce as the institutional scramble for physical supply intensifies. According to recent surveys, nearly 70% of central banks plan to keep increasing their gold reserves over the next 5 years. This means the buying pressure isn't going away anytime soon. The refining and production capacity for gold is being pushed to its limits to keep up with this institutional hunger. Every ounce mined is already spoken for by a sovereign buyer. At global summits, the conversation is shifting from dollar liquidity to resource security. In this new landscape, gold is the primary resource that every nation wants to secure. This accumulation is happening quietly because no central bank wants to trigger a panic or a massive price spike before they've reached their target levels of reserves. But for those who are paying attention, the signals are clear. The foundation of the global monetary system is being rebuilt bar by bar in the vaults of central banks. Its value is timeless, its utility is unquestioned, and its importance has never been greater than it is today in 2026. Gold is back at the center of the world stage. As an investor, understanding why central banks are making these moves allows you to align your strategy with the biggest players in the game. Don't be caught off guard by the shifts to come. Make sure to follow Market Shock Brief for more insights into the hidden forces moving the markets. Like and subscribe to stay ahead of the curve. Market Shock Brief, your source for market intelligence. Thank you for watching, and we'll see you in the next report. Thank you for joining us today for this deep dive into the world of central bank gold reserves. We hope this information helps you navigate the complex times ahead. From Basel to Beijing, the coordination and competition for gold reserves is a story that will define the next decade of global finance. Stay tuned. The journey from deep underground to the central bank vault is long and difficult, adding to the inherent value of this finite and precious resource. Even as interest rates change, the fundamental need for a tangible store of value remains constant. This is the bedrock of central bank monetary policy in 2026. In a connected world, any shift in reserve assets sends ripples through every market. Understanding gold is key to understanding the global economy. Purity and weight are the standards of trust. In a world of digital complexity, the simple physical reality of gold is its greatest strength. Looking ahead, we expect central bank demand to remain a cornerstone of the gold market. The forces of de-dollarization and inflation are here to stay for the foreseeable future. A new day is dawning for the global financial system, and as the light hits the skyline, it also hits the gold that is securing our future. Is your portfolio ready for the shifts that central banks are already making? Now is the time to review your strategy and consider the role of gold. This has been a Market Shock Brief special report. We thank you for your time and your trust. Until next time, stay informed and stay profitable. Goodbye. The pulse of the market is constant. Stay connected with the information that matters most to your financial well-being. Every grain of gold has a story, and today that story is being written by the most powerful financial institutions on earth. Throughout history, gold has outlasted every empire and every currency. Central banks know this history, and they are acting accordingly in 2026. The maps may change and the technology may evolve, but the fundamental value of gold remains one of the few constants in our changing world. This is the foundation upon which the new global financial order is being built, solid, reliable, and immune to the whims of any single nation. In summary, the quiet buying of gold by central banks is a clear signal of a world in transition. By watching their moves, we can better understand our own future. As the sun sets on the old financial order, a new one is beginning to take shape, and it is gilded in the glow of central bank gold. Value is elusive, but for those who know where to look, it is as real as the metal itself. Thank you for following the story with us. Once more, this has been Market Shock Brief. It's been an honor to share this report with you. Good luck in your investments and stay safe out there. The world is connected by more than just trade. It is connected by the shared pursuit of security and prosperity. Join us as we track the journey. What was once molten and uncertain is now solid and enduring. This is the transformation that central banks are seeking for their reserves today. Our mission at Market Shock Brief is to bring you the stories that others miss, the quiet moves that make the biggest impact. Thank you for being part of our community. Scale, security, and strategy. These are the three words that define the gold market in 2026. Don't miss the next chapter of this incredible story. The future is bright for those who are prepared, and at Market Shock Brief we are here to help you get ready for whatever comes next. We'll see you very soon. This is Market Shock Brief signing off. Take care and stay ahead of the shock. Goodbye for now. Market Shock Brief, your source for market intelligence. Subscribe now for more deep dives into the global economy. The quiet buying continues. The world is changing. Are you ready? Market Shock Brief. See you next time. Knowledge is the ultimate asset. Stay informed with Market Shock Brief. Good night and good luck. Secure your future. Understand the gold. Market Shock Brief. Signing off. Market Shock Brief. See you in the next one. Subscribe now.